Job cuts in the news at two big companies. Amazon today laying off about 14,000 corporate workers with plans to reportedly cut a total of 30,000. UPS says it cut nearly 50,000 employees across management and operations when you add it up. And what is this telling us? Doug Flynn's here from Zito Capital Management. We knew, story after story being written about the AI effect, and this is going to come and it's going to have an impact on the job market at some point. Is this the point? Are we seeing it?
Partially, yes. I know these jobs tend to be in the sort of white collar, middle and upper management level. But the CEO of Amazon has come right out and said that they definitely need less people to do the same amount of work. So it's coming on the backs of AI for sure. And so, there are other things at play here. They want to reduce sort of the levels of management. There's a lot of bureaucracy, but they're also shifting some big bets into AI and automation and infrastructure. So they need some of that money. A big labor cost can weigh that down. So they'll redirect some of those dollars into there. And so you're starting to see some of that. And it's pretty much the same thing at UPS, although, with some of the AI stuff, but UPS has its own issues. Funny thing about UPS, half of the packages that they delivered for Amazon, which was their biggest customer, are getting cut in 2026 because Amazon's doing more itself. So there's also some issues there, and they're closing some stores. So it's a combination of things, but you're starting to see it play out for sure through AI.
Yeah, so one of the questions, and the thing with kind of the onset of this AI era, or whatever you want to call it, is that the speed has been the story in many ways. Compared, as we've talked, you and I before, to the internet even 25 years ago. This is so much faster. So I bring that up because the Federal Reserve's meeting now. They'll cut interest rates most likely tomorrow. That's the expectation, at least another quarter point on the overnight bank lending rate. How do you manage all of it, and how much do you consider these changes in the economy as you're trying to quote unquote manage it if you're the Fed?
Sure. So we don't have all the information that we normally do because the government's not working. But there is a lot of private data, and Goldman Sachs, as an example, they run something that's called their measure of labor market tightness, and that fell back to the worst labor market tightness level that they've seen in 10 years. So that means tightness just means it's hard to find another job. And so that's the issue, is when you do lose your job, it's taking longer to find another one. And some of it is because the companies are leaning into AI and they're trying to see. They also overhired a lot during the pandemic, and so some of that's still on the books. That has to work its way off too. And so the Fed's weighing all that in. The labor market is an issue. And then you didn't have inflation come through as high as everyone thought it would, because we keep talking about tariffs going to have this crazy high inflation impact. It hasn't happened, and so those are the reasons why the Fed is going to lower tomorrow, and then very likely, in December as well. So we'll see how that plays out. But I think that's what they're looking at, is the private data, and maybe they have some information that we don't have, being part of the government. I don't know.
Yeah. So is it the next 6 months to a year, how aggressive do you expect this Federal Reserve to be? Regular people borrowing money, whether it's interest rates on credit cards or home loans or car loans or whatever it is, how much lower do you think interest rates are going to go down?
Yeah, the outlook is anywhere from 0.5 to 3/4 of a point. I think that's the sort of expectation over the next 2 to 3 meetings. And look, for small businesses, that's a great thing. When small businesses can borrow at a lower rate, they can actually expand, they can hire, they can do things. So that's a real benefit to the lower rates, more even than the bigger companies, which is how some of this might play out. So there's a shift from some of the larger companies to some of the smaller ones. But I think that's the expectation. Now, if the economy gets even weaker or inflation moves one way or the other, they'll of course adjust that. But that's, I think, what you're looking at. So even though mortgage rates move down ahead of this, you could see some a number with a 5 in front of it in the early part of next year on mortgages, and then that opens up a whole other thing for the economy as well.
All right, Doug, thank you. As always, Doug Flynn on the economy.